You were listening to chartingwealth.com for Thursday, the 26th of May, 2016. What do we have going on? Well, we have another up move in the total market. On Wednesday, the 25th, the market was up 0.71%. Big up move. The two-day chart has not yet crossed over going up. Don't know if this up move is going to be temporary or is going to be enough to pull the market over. Derivative oscillators lost a good bit of its energy, and there is a converging between the red signal line and the blue MACD line. We shall see what we shall see. We broke the two-day trend line actually back on the two-day candle on the 24th of May. So big surge up in the market actually on our Heikin Ashi candlesticks, broke through the top of the Bollinger Band. So lots of up movement in the market. If we look intraday, what do we see going on? Well, the 4-hour chart, again, strong movement over the last 2 days. Strong movement in each of the candles, actually pushing all the way up above the Bollinger Bands, both in the morning and in the afternoon on Wednesday, the 25th. So what does that actually mean for us? Well, it means that we are waiting to see if indeed there's going to be a crossover going up. We don't redraw our trend line until and unless that occurs. So we haven't seen in the opposite direction. We would, of course, redraw it. If there was a bump up and then it started moving down again, we would redraw it going down, but we don't change the direction until there's an actual change in the MACD. So that may happen tomorrow. Maybe that's the end of the move. We don't know, so we're in a holding pattern to wait and see if it's confirmed. If we go now to the two-day chart on the S&P 500, it was up 0.68%, looks very similar to the IYY, the total market, pushed through the morning of the 25th. It actually pushed through the trend line, and we are above our Bollinger Band at this point. Still don't have a crossover. It looks very similar to the IYY, the total market, so we're waiting to see on that. If we go to our 4-hour chart, what do we see? Very similar, 4 half-day up candles, so 2 full days of strong up movement. That is where we are. We have the crossover going up on the 23rd on the 4-hour chart. That was followed about a day later or so, well, about half a day later, by the 4 big up candles on the half-day chart, so 2 full days of up movement. Derivative oscillators in the positive, as is the MACD. Now let's go back to our 2-day chart, and we're going to look as far as our last index. We're going to look at the Qs. It was up 0.72% for the day. 2 big up candles there. We don't have the candle for the 25th yet, of course, complete. That'll be completed on the 26th, but a really beautiful crossover going up on the 2-day candle. We saw a crossover on the first day of that 2-day candle on the 25th of May, crossed over on the MACD, and at the same time the derivative oscillator crossed over at a big strong candle. Actually two-day strong candles with up wicks on top, no down movement at all on those candles, so a strong uptrend for the last 3 days. So let's now go and look at our 4-hour chart to see what's going on the Qs, and it looks somewhat similar to the IYY and the S&P 500, except it actually was well above the Bollinger Bands on, well, we have all 3 candles have actually peaked through the Bollinger Band, and even the first moving candle was a little bit above the Bollinger Band back on the 24th. So strong up movement ever since that crossover going up on the 20th, and that was followed soon after by the derivative oscillator flipping over after the MACD started moving up. That is where we are again. We don't have crossovers yet on any of our indexes except for the Qs. Crossover going up. Qs is in a confirmed up move now, so we can start redrawing our 2-day trend line at this point. Wait for a pullback, see if indeed there is going to be a place for us to get in on that 4-hour chart. Now lastly, Let's go take a look at gold. Gold was down 0.27% for the day. We have 4 candles. And again, this candle for the 25th is only half of that 2-day candle. It's not completed yet. It'll be completed at the close of the day on the 26th. Gold crossed over going down back on the 18th. Derivative oscillator flipped over at the same time. 4 strong down candles. If we look at our intraday chart, what do we see? Don't have a rollback yet. Don't have a way to actually get into gold until and unless that rollback occurs, and then we see gold continuing in that down momentum. So that is where we are. Markets have been surging for the last couple of days now as far as our 3 indexes go. That is the total market, the S&P 500, and the NASDAQ 100 as represented by the Qs. And we have gold conversely turning over and moving down. We saw gold go down strong in the morning and pull back a little bit in the afternoon so that its moves were not nearly as strong down as the 3 indexes were up. So we'll continue to monitor things, see if we see any entry points. If you've got questions, concerns, problems, we love to hear from you. Please go to chartingwealth.com website, sign up for our newsletter. When you do that, you will receive, of course, every day our video podcast. In addition to that, you'll get links to our How to Read a Stock Chart video, as well as the layout that we use at freestockcharts.com. Remember, the operative word there is free. So we encourage you to please get that good training. Let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it, we are there. If you really want to help us out, go to iTunes, subscribe to our podcast, give us a nice 5-star rating, and say something nice about us. Thank you so much. We always love to hear from you from chartingwealth.com.